Greetings, welcome to the show. This is the overview, and I'm your host, Brother Mbogo. Today I'm going to take a look at gold. I've been reading recently in the news that gold has accelerated in demand, not just for ordinary people, but for the major banks or central banks. So I'll be taking a look at gold and some of the background and history of this thing called the gold standard, and also what's happening and why the dollar is so supposedly declining as a reserve currency. But I'll define those terms first, because people hear reserve currency and are not sure what it is, or gold as a reserve used by central banks, and people don't know what it is. So a reserve currency basically is primarily held by central banks worldwide. It is used to facilitate international trade and stabilize economies. Since 1944 I should say, the US dollar has played a crucial role as the dominant reserve currency. So I'll be looking at that basically. And the basic four frameworks of what gold is. A reserve currency, of what a reserve currency is. A reserve currency is held by central banks to facilitate international transactions and minimize exchange risk. And the dollar became the world's primary reserve currency in 1944 after the Bretton Woods conference or agreement. And the removal of the dollar, I think it was in 1971, it was removed as, it was decoupled from gold. And this brought in what they call the fiat currency. That's a currency with no backing of any kind. And then finally, this de-dollarization process, which is taking place more recently. These are the three factors of what's happening with, or the four factors what's happening with reserve currencies at the moment. So the gold standard, which is where you align a currency with gold, it was a monetary system that defined a unit of a nation's currency as fixed to a weight of gold and made the two mutually exchangeable. For much of modern history, several versions of this pairing served as the foundation for global trade and finance. Under the gold standard, governments promised to redeem paper money for a defined amount of gold on demand, which made the value of currency stable and predictable. That stability fueled unprecedented global integration, linking the prosperity of many nations through their shared logic of the gold standard, of some kind of gold standard basically. So what happened in 1944? When they pegged the dollar to the gold, or to a certain amount of gold, there was a conference in a place called Bretton Woods Hotel in the US, where global economists met and discussed a new financial system basically. And there was a competition between two currencies to be used as the international reserve currency. One was called the Bancor, and this was introduced by a UK economist, this John Maynard Keynes, and the other was introduced by a gentleman by the name of Dexter White. He's an American. He's the one promoting the use of the dollar as the international currency. Keynes was promoting the idea of the use of this currency called the Bancor, which would be used primarily as an international currency for international trade. So anyway, I'm going to give a background to that. The Bancor was a supranational currency that John Maynard Keynes and E.F. Schumacher conceptualized in the years of 1940 to 1942, and which the United Kingdom proposed to introduce after World War II. The name was inspired by the French bank, or bank meaning gold, or bank gold. This newly created supranational currency would then be used in international trade as a unit of account with multilateral clearing system, the International Clearing Union, which would also needed to be found at the time. So that was being proposed at this Bretton Woods conference by the UK economist, and some more details about that basically. The institution, or the GATT, General Agreement on Tariffs and Trade, which was like the World Trade Organization of today. In fact, it was supposed to be the World Trade Organization, but the GATT was like a precursor to that. And then you have currency should be linked to a virtual currency, the Bancor. trade balances should be controlled by an international clearing union, which would use balance of trade credits and deficits to change currency values, or force countries to find ways of clearing their international trade account. The problems with this, though, was that the UK, because it was heavily indebted to the US, it lost the strength of the pound and its trading zone. And it was also at one time back to gold. And because the UK at the time needed, around the time of the war, after World War II, it's basically broke and it needed financial assistance to rebuild the country under this, what they call the Marshall Plan, which is a program by the US to help refinance countries in Europe basically to rebuild their economies after World War II. And this is one of the reasons behind the use of the dollar, or why the dollar became the global currency, reserve currency, because the US could pressure the countries that needed the Marshall Plan assistance. They could be pressured by the US to say, unless you agree to the dollar becoming the global currency, you're not going to get the financial assistance. And this was proposed by an economist from the US called Dexter White. He was stated that under this agreement for the Marshall Plan, currency should be linked to the dollar, and the dollar is linked to gold. Trade balances should not be controlled, and countries should not be allowed to create import barriers. The Marshall Plan should be tied to acceptance of the US proposition. Because of this, the US held the world's gold around 70%, at the time, that's 1944, 70% of the world's gold. And it also held much of the world's debt. And the US had the greatest productive capacity. These are all factors which played into why countries were forced to accept the gold as the global reserve currency. Anyway, and the last one is the US wanted to break the UK dominance of the world trade environment, which the UK, because of the colonial period, controlled that environment at the time. But after World War I and II, it became a broke society. So that's some background to the gold standard and why the US dollar became the currency that people began to use as the international currency for trade. But let's look at more current issues around why the dollar has begun to decline as a global currency trade. As a global currency for trade, we all know about the financial crashes that have been taking place, or financial issues, I should say, that have been taking place over the last almost 20 years, especially since the financial crash around 2008, and the financial and derivative games that were being played in the US, which helped to disorganize the global economy. And some US and European banks crashed as a result of this, their financial games, basically. So there are several reasons that have been advanced to explain the growing demand for gold, for the generic public factors including hedging against inflation and or against political and geopolitical risks. That's the wars and tensions that have been taking place, like this situation at the moment that you find with Iran and Israel and America, and Iran's restriction of the Strait of Hormuz, which means that countries cannot get the oil they want, and countries that are selling oil can't get their revenue. Anyway, central banks have moved into gold in a way to diminish sanctions risks. That's US sanctions in particular. I'll go into that in a while. They can take physical possession of the gold they have bought and kept in domestic vaults instead of leaving it at Western financial institutions such as the US Federal Reserve, the Swiss National Bank, or the Bank of International Settlements, where gold is subject to Western jurisdiction. I think it's Venezuela who had the issue where they wanted to claim their gold from the UK or America, but they were not allowed to claim their gold. That's the problem when another country is keeping your your stock of gold, and you want to regain it or take it back and keep it in your own country. Countries can refuse basically to give you your gold, which of course can affect your economy. And these are the factors or areas where there's increased demand for gold. Central banks have increased their demand. Gold for investment. There's jewelry, as we know, people like the gold jewelry, and for technology. So the greatest increase is domestic for jewelry, then investment. Central banks have also increased, but not at the same rate as others. So there's a look at the increase in demand and areas where demand has increased. And in terms of central banks, why are central banks choosing gold over treasury? A treasury bill basically is the US government will issue a bond, or basically it's a paper where people can buy the debt of the US. So the US basically borrows money from other countries, and the treasury is basically a document referencing to that. And this debt is, the countries that buy a treasury bill or give a loan to the US doesn't necessarily pay back the treasury bill straight away. What they normally pay over a period of time is the interest. They'll fully pay back the loan after a while, but the countries that give out the loan are benefiting from the interest that they get from the US. In each of these last 3 years, central banks have collectively purchased over 1,000 tons of gold that's almost a double the annual average from the previous decade. The World Gold Council reports that 76% of central banks expect to increase their gold holdings over the next 5 years, while 73% said they expect their dollar reserves to decline. So they're going to be storing more gold instead of dollars. And some of the reasons are here. Post-pandemic inflation has eroded confidence in the fiat currencies, that's especially the dollar. US fiscal health is deteriorating. Rising deficits and debt levels make the US treasuries more risky. Treasuries are vulnerable to US sanctions. BRICS nations want reserves that cannot be frozen or blocked by the US government. And that's one of the major factors in that since the war in Ukraine started, I think it's 2022, the US sanctioned Russia and blocked Russia from using these international financial institutions like the SWIFT system, that's the interbank payment system. So Russia couldn't really make payments abroad or receive payments from abroad because it was blocked from this system. And plus the sanctions also prevented international companies from trading with Russia, or even international companies that they had their branches in Russia had to pull out because they could no longer do business with Russia, because Russia couldn't use the US dollar basically. So because of this, Russia formed its own payment system. In fact, many countries in the global south have formed their own payment systems because they realized that Western, or the US in particular, if it controls the global financial system, it can eject people from the system basically, stop people from being part of the system if it feels like it, or if they're not doing what the US wants. So other countries, or particularly global south countries around the world, have decided that they want to no longer be part of that system, but have alternative systems that they can use in case the US decides to play its games. Anyway, continuing these, the Federal Reserve independence is under question, raising doubts about the long-term monetary stability of the US. And geopolitical instability makes neutral assets like gold more appealing for settling transactions between nations. So gold is more suitable basically because, as I said, because they can't trust the dollar, and now that America weaponizes the dollar. And continuing, central bank governors in emerging markets, particularly in Asia and Eastern Europe, were primarily drivers of this demand. These institutions added over 1,100 tons of gold to their vaults in 2025 alone. They viewed the metal as critical shield against inflation and potential asset freezes by the US. And the US national debt crossed 38 trillion. So it's no longer seen as such a safe haven, these US treasuries, because the US is amassing more and more debt. So the dollar as a reserve currency is becoming more questionable. And they see gold as a more stable asset because the price of the dollar can fluctuate, whereas gold is more stable. Central banks have been accumulating gold at persistent high levels over the past several years, holding now roughly 36 to 37 tons of gold, placing gold's share of global official reserves at around 25 to 27%. The dollar is still somewhere just below 40% of global reserves, but gold is slowly creeping up to catch up with the dollar. It will surpass the dollar eventually, because many global south countries, particularly within the BRICS, are moving away from the use of the dollar, as I've said in previous programs. They're trading more in their own currencies between each other rather than using one global currency. They find it better to use their own, where they can, use their own local currencies to trade with other countries, their neighboring countries, and countries that they trade more regularly with. Anyway, continuing. Looking now at the decline of the dollar itself. But first I'll look at the petrodollar. The petrodollar was pegged to Saudi Arabian oil back in the 1970s after the dollar was removed from the gold standard. The gold standard being detached from gold in around 1971. There was some tensions between the gold suppliers like Saudi Arabia and the West. There was a period when Saudi Arabia stopped supplying oil to the US. So because of that, they made some agreement in which they called the gold standard, in which the dollar was pegged to Saudi Arabian oil. So the agreement basically was that oil could only be sold in dollars. And this itself has also brought tensions between countries, with the US and countries like Iraq and Libya. Both are countries which decided to stop trading or selling their oil in dollars, and both were invaded by the US over periods of time. The petrodollar is described as a central mechanism of financial hegemony, functioning as a recycling machine that channels the continuous purchase of US Treasury bonds. So the agreement with Saudi Arabia and the US was that the US would buy oil from Saudi Arabia with dollars, but Saudi Arabia had to store its money from the US, the money that it earned from the US in US Treasury bonds, basically. And those bonds now they would use to buy arms from the US. Basically, they help to circulate the dollar to the benefit of the US. These bonds return to the system as funding for high expenditures, including prolonged wars, sustained by the dollar's position as a reserve currency. So they instrumentalized the dollar to their benefit, basically. And this system was described as a de facto monetary imperialism. The BRICS emerged as a strategic choice for the Global South, and this grouping coordinates initiatives aimed at creating alternative payment systems, as I mentioned. So one of the key tipping points was, as I said, when Russia invaded Ukraine, it was expelled from the SWIFT system, and which caused them, of course, to seek to create their own financial payment systems. So the dollar, these things are bound to happen. It's bound to be a time when, if you're a dominant currency and you misuse your position as having the dominant currency to bully other countries into doing what you want. Basically, you want to dominate the global economy, and if another country is rising up, you now find ways to prevent them contributing or being part of the global economy. Simple, because if they continue to be part of the global economy, they can start to grow. Particularly if you look at China and the way the US is behaving with China in terms of trade, trying to restrict Chinese goods from entering America. So anyway, let me continue. The dollar weakens, falling below 40% of global reserves, as I said. That was the headline in one of the international economic documents or websites. So this basically is saying that it doesn't matter that the dollar's declining share in the global reserves. Does it really matter to it? Matters to America, but does it matter to the rest of the world? To the rest of the world, yes, it, in a sense, because their own local currencies, if it's the smaller countries, are not really recognized. So them being able to trade with all countries in the world is more difficult in their own currencies, because their currencies are not recognized. So the dollar as an international currency is better in that sense. So for smaller countries, they can't, well, in fact, they are in the place of finding alternatives, as I said, with the BRICS system of trading in local currencies. Benefits some. Give an example of, for example, Russia and India have been, India's been buying oil from Russia using its local currency, the rupee. So Russia now receives these rupees, but there's not a lot it can do with it, because not many countries in the world accept rupees. So I think what it did, it sold off cheaply. It's made some agreement, I think was with Malaysia. So it basically sold off a certain amount of its rupees to Malaysia, because keeping the rupees wouldn't have benefited Russia. So trading in local currencies is okay to a certain extent if the currency is used by other countries, even a small number of other countries. But if your currency is not used by any other country, you buying goods from a particular country with your currency is not going to benefit the country that receives your currency, because they can't actually use it. So although yes, you can trade in local currencies, but that's a limited situation in some ways. That's why they're talking about another currency called the unit. The BRICS is supposedly setting up another currency called the unit, which is backed by 40% gold, and the other 60% is made up of a basket of BRICS country currencies. They're saying that was introduced in December. So it's still on trial at the moment, just trying out that new currency. But currencies are being developed. The US as the dominant global currency provider is still declining. I think within the next 30 to 50 years, the US dollar will be down below maybe 20% in terms of global currency use. That will affect the US economy. They'll no longer be able to bully countries with sanctions or control of financial systems, as I said also, new financial systems, alternatives are being developed to bypass the US and the systems like the IMF, the World Bank, and this SWIFT system. So the world is changing basically, and it's to the benefit of the global South. So that's it, the basic look at what's happening with the gold standard, as you might call it, and the decline of the dollar as a reserve, global reserve. So that is it for now.